the Digital Disruptors, the show where we get candid with the C-suite about how digital transformation is changing the lives of members one bold idea at a time. I'm thrilled to have Sumeet Grover to the show today. Sumeet is the EVP and Chief Strategic Growth and Digital Officer at University Federal Credit Union in Austin. Earlier, he was Chief Digital and Marketing Officer at Alliant Credit Union, which we know is one of the largest digital-first credit unions at about $20 billion in assets. Not only that, he's a Forbes contributor and member of the Wall Street Journal's exclusive Global CMO network. Now, Sumeet, we always start the podcast on a lighter note. So somebody told me, a little bird on my shoulder told me that you're a fantastic Bhangra dancer. But having seen you in action, you're also an orchestrator. That word is going to come up again and again in this pod. You get everybody on the dance floor to do their thing before you break out the master moves. Thank you. And that came for the GSE event last year. So my memory is pretty fresh on that. All right. So again, we're going to use the word orchestrator quite a bit in this podcast. Let me jump to the first question. And you're pretty passionate about this topic. So effectively monetizing AI, as we know today, is not just about using AI for driving automation or point solutions like risk calibration, but it's much bigger. And to really get the benefit of AI for the members in their journeys and make their lives more fruitful and productive, and the credit union supporting them, you have a certain take on it, Sumeet. I would love to.
First of all, Aditya, thanks for having me. It's so great to be chatting with you. Love it. And oh, what an interesting start. So I will tell you, like, my passion for dance actually was more in terms of choreography. So you got that spot on because it was more fun choreographing, bringing everybody together, putting those steps in place, and then enjoying the outcomes that come from that. Oh, it's so much fun. But thank you for your question. Look, AI only creates value when it is orchestrated across the member journey, not sprinkled in as point solutions. Automation and risk calibration are table stakes. In my point of view, that real monetization comes from using AI to deliver that right conversation to the right member at the right time. When AI reduces that friction, anticipates the needs, and frees humans to focus on advice and trust building, that's when it actually makes those members' lives better. And that's when the business sees those real returns. You know, AI's value isn't efficiency alone. It's an hour saved and trust earned. And once you put that lens on, it really brings things to life.
And I think in some ways, if you're able to spend more time in trust building activities, which is the emotional quotient piece, which really drives long-term value both for the credit union and its members, and then be able to kind of take some of the rote tasks and move it into AI for automation, then in that sense, that really starts to align the members and the AI, or the ability for AI to align the right use of resources of the credit union for the members' benefit, right? Do you, in that sense, would you be able to share maybe one or two anecdotes that you want to talk about where you've seen use of AI, where this really expectation that we want, or the movement towards the member journey that we want to enrich has actually been achieved, or areas that you're working in today? We'd love to kind of share that as a practice.
Absolutely. So one simple example is account opening and onboarding. Look, in financial services, that's usually the first step when you start trying to build trust with potential members or existing members that are opening, newer products and services with you. So in general, we used to treat it as a task to complete, right? Look, I've been in financial services 25 years at this point and, gone through many different journeys when we did have AI and when we didn't have AI. But when you treat account opening and onboarding as a task that needs to be completed versus now where you're using AI to remove that repetitive work, that's where that simplification occurs. Frictionless will always beat flashy. And as we think through that, steps like identity verification, data pre-fill, routing, simplify that. So the member gets to the value faster.
Okay. Or
that
even
frees
KYC check.
KYC, 100%. Because that's going to free our teams to focus on the trust moment that you just mentioned, explaining benefits, setting up alerts, scheduling auto pays, helping the member feel confident from day one. The AI would do the heavy lifting. The human will build that relationship. And that's how we have to think through this. Maybe I'll give you another example. I'll take this one from servicing and fraud. AI, artificial intelligence, can help us reduce false positives and route issues correctly the first time. So how we want to think through that journey. What that really does is it gives our frontline more time for high value conversations, just in general. Coaching a member through the decision instead of apologizing for friction that a process is causing.
Yeah.
That shift from handling transaction to building trust, that is where that long-term value is truly created for both the member and the credit union. That's how AI aligns resources to members. The machine can handle repetition, humans can handle the trust.
That is a great statement. That's a great statement. So just building on that, if you are advising, and informally I know you do, if you are advising credit union CEOs and CXOs or CMOs or CDOs about their priorities in the next 12 to 18 months using both traditional AI and LLMs and Gen AI for both those aspects of really, really amping up the member personalization, the benefit you can deliver. If there were two or three key priorities you would want them to focus on, or you can take this question a little bit broader, gotchas that you want them to avoid, what would those be as you look as you're giving them advice looking into 2027?
Yeah, look, if I'm advising CEOs and CXOs for the next 12 to 18 months, let's say, I'd focus maybe on three priorities and a couple of hard gotchas. And Aditya, we didn't plan this in advance, so this is just coming top of mind, right? So, in no particular order, first, I would probably say anchor AI to real member journeys, not to tools. Because today, what ends up happening is we started discussing fintech capabilities, features, tools, systems. No, let's anchor to real member journeys. Start where that friction is highest. It could be in onboarding, it could be in servicing, it could be in fraud, it could be in payments. And then design the AI to remove that effort, shorten the time to value. If you cannot explain the member benefit in one sentence, it's probably not the right use case. Let's take a second one. Use AI to free humans from trust building, not to replace them. So
Got it.
LLMs, you mentioned, right? So LLMs and GPT style tools, they're incredibly powerful for agent assist, summarization, and decision support. The win, Aditya, is better conversations, not fewer conversations.
So timing is very critical in the triggers, knowing the triggers, and then having the right type of offering slash solution to that to respond to that particular trigger and help them.
Agree. Third one, this I'm very close to right now because it's top of mind for me as I'm working through some of my AI implementations. But get data and governance right and get it right early. You don't need perfection, but you do need clarity.
Right.
What data is being used, why it's being used, and how those decisions are being explained. Transparency is what's going to make personalization feel helpful. Otherwise, it's creepy. So you asked gotchas. So maybe the gotchas are just as important. Don't chase shiny demos. That won't scale. Don't deploy AI in isolation without the right operating model. And don't let speed outrun trust because once members lose confidence, it's very hard to earn it back.
True. And usually on the last point, it feels to me there's one point of failure and that's it, in the sense that, the drop off is, you build incrementally, but the drop off can be one large slide.
Yeah. Spot on.
Awesome. All right, let's move on to our second question, the second and the last question. Leveraging Gen AI, and this topic is around leveraging Gen AI for personalized member experience. But really, and this kind of dovetails to the first question, but doing this at scale as credit unions want to scale digitally. So you've been a very big vocal proponent of AI enablement. You recently participated in a financial service forum where you were talking about Gen AI based transformations. Question that I had broadly was, as credit unions compete with fintechs and large banks with massive budgets, PhDs on staff, so on and so forth, how do credit unions compete against these sophisticated competitors who are coming after your members and kind of build these life cycle based experiences and deep member relationship without having the resources of a Fortune 50 from the banking side? So what are some practical advice or tips or hacks that you have thought that you think are valuable to share in the credit union?
Yeah. So on the trust factor, let me just say you're spot on. Trust is binary. You earn it slowly, but you can lose it in one moment. That's why scale with AI has to be very intentional. All right. So credit unions don't win by outspending big banks or fintechs, Aditya. That's not going to happen. There's no way I'm going to win by outspending the top four, the top five. We win credit unions. We win by out orchestrating them. See what I just did there? I hand back to your team.
Yes. The orchestration piece. Yes.
So AI-enabled memory and Gen AI transactions let us compete on relevance, not on headcount or the resume of that headcount. When the institution remembers context, who the member is, where they are in their life cycle, what happened the last time, you don't need a massive budget. You absolutely need focus. The advantage credit unions have is proximity to the member and true clarity of the mission and purpose. I don't need hundreds of models. I need a few that work across the life cycle. And I'm just using previous examples, onboarding, servicing, lending, advice, that are explainable and trusted. Most importantly, Gen AI doesn't replace scale. It creates scale. It turns institution knowledge into a shared asset. So every frontline interaction feels personalized, even as you grow. That's how smaller institutions compete with much larger ones, by being more human, not more complex. And that's a true advantage. The winners won't be the biggest players. Aditya, I can tell you that right now. I don't doubt that for 1 second, that winners won't be the biggest players. They'll be the ones who remember their members best and act on that memory responsibly.
And you know what is powerful, Sumeet, is the fact that you worked at a tier one institution, and you obviously now for the last 8, 9, 10 years, you've been very deep at the CXO level in the credit union. So you actually have not just an insight, you actually have seen this in action on both sides of the table in that sense, right? So I think that's a very powerful advice, and I appreciate you sharing it. Good. I look forward to Sumeet seeing you at the GAC